Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices, that being the S&P500, the Nasdaq100 and the Dow Jones30 futures charts. Just before I start today's video, team, as always, anyone who's interested in joining my Signal team, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's video. So all you have to do is scroll down, click on that link, it will bring you to this website, and then once on this website, just scroll down ever so slightly and you'll see this monthly subscription package for a very small fee of $29. If you click subscribe there and sign up, it takes less than a minute, and that will give you access to my Signal group, as well as receiving my daily market research, which I post every morning prior to the US markets opening to help you guys navigate through the trading session. But let's get started with today's video, starting off here with the S&P 500, currently trading at 4,925. We're dipping ever so slightly during today's trading session. We've had a few earnings. We had Caterpillar, we had McDonald's, and those stocks are trading a little bit lower. I think McDonald's is down around 3.5% due to weak international sales, with boycotting in the Middle East, etc. So I think some of these stocks are slightly weighing down the broad indexes, and you have to admit as well, we've run up a very long way over the past 3 to 4 months. So I think this is perfectly normal, and I think just to kind of analyze where we are in terms of the in terms of seasonality, if I just quickly show you this graph here, which I posted in my Signal team this morning, this shows you the average S&P 500 performance dating back to 1950, when the prior year we've seen more than a 20% gain in the index. And as you can see, it's quite a choppy month, and ultimately we do end the month lower. So I think from February through till March, seasonally speaking, is a quite weak period for the stock market. So just looking at the S&P 500, I think that we are probably likely to see some more weakness as we work our way through the rest of the month of February. But I think that is going to be healthy. Some consolidation here is going to be very, very healthy for us moving forward later on in the back half of 2024, where I do ultimately expect this market to trade up towards 5,200 to 5,500. Then moving over to Nasdaq100, very similar to the S&P 500, if not more so. We have rallied significantly here for the Nasdaq100. Since those October lows, in terms of a percentage perspective, we've rallied 25%. That's almost 3 years of expected market performance in 3 months. So very, very, very sharp rise here in the index price, and I think some consolidation is desperately needed. We've had stocks like Nvidia, for example. This stock's up 40% just in the past 3 months. Stocks like Microsoft trading at record high, AMD, and I could continue to go on, but just similar to the S&P 500, we need some consolidation here, perhaps down towards the 0.236 fib area, which sits around 16,800. And then, moving over to the Dow Jones30, currently trading up still above 38,000 at 38,250. This index hasn't actually run up as much as the others, in terms of a percentage perspective. From those October lows, we were up 18%. It's still a very big gain in a very short period of time, but of course the Dow Jones 30 isn't as volatile as the Nasdaq 100 and the S&P 500, hence why we've seen less gains. But in terms of its own historical performance, the Dow Jones 30 is very overextended at these current prices, and I think it'll be healthy to see some digestion. A few charts that I'm really going to be keeping a close eye on is the US dollar. We continue to trade higher. Back in 2022 and especially in 2023, every time when the dollar went higher, last year was a great example between August and September, when the dollar traded higher, we saw US equities become quite soft and weak. So I think that for the US equity rally to continue, we would need to see a reversal in the dollar's gains. And then last but not least, I'm looking at the 10-year yield. We've just got catapulted higher here since those stronger than expected jobs number that we got last Friday, which come in at 335,000 versus 185,000 expected. And with that being the case, higher 10-year yield, that is also going to continue to pressure US equity prices at present. So we do need to see a reversal in rates, and the good news is that I do expect this to happen, but again, I think we're just digesting those very strong gains that we've seen over the past 3 to 4 months. That's going to wrap it up for today's video, guys. Thank you very much for tuning in. Don't forget, if you'd like to join my Signal team, then make sure you visit my website, dailymarketmovements.com. I left the website link in the description of today's video, but thank you very much, and I'll see you all tomorrow.